Welcome to the Byte-Size Brief. Today we are putting SanDisk, SNDK, that's SNDK, completely under the microscope. Let's get into it.
Yeah, I'm really glad we're tackling this today because it's just a fascinating moment to do a deep dive on these guys.
Right. And to give you all a clear map of where we're heading, we've pulled together like an incredibly diverse stack of sources for you today.
We've got everything.
Yeah, we're looking at recent Wall Street analyst coverage, SanDisk's official Q2 earnings reports, the structural fallout from that Western Digital spinoff.
Which was huge, by the way.
Totally huge. And actually even a massive, very angry thread from the professional video editing community over on Reddit. So we are taking all of this and cutting through the noise to figure out what is really going on.
And, if you look at the stock chart right now, it is almost hard to process.
Yeah.
I mean, we're sitting here in late April 2026.
Right.
Just a little over a year ago, in February 2025, Western Digital finally spun this company off into its own independent entity.
Yeah, and I remember the sentiment back then. A lot of retail investors looked at the news and thought, oh, the thumb drive company, like the SD cards I put in my digital camera.
Right, exactly.
But the market has entirely re-rated them. I mean, the stock has absolutely exploded. We are talking about a run of roughly 1,000% in just the last 6 months.
Wow.
It hit a staggering 52-week high of $976.78 just a few days ago here in April.
Which naturally forces us to ask a very uncomfortable question.
Yeah.
Whenever we see a hardware stock go completely parabolic like this, you have to look under the hood. Memory stocks have this long, brutal history of being notoriously cyclical.
Oh, absolutely. They boom and then they bust hard.
Right. So the overarching mission for our discussion today is figuring out the reality of this current momentum. Like, are we looking at a genuine, sustainable AI supercycle?
Or is this one of the most dangerous bull traps the tech sector has seen this decade? Well, to figure out if it is a trap, we first have to, understand the bait. And the bait here is a fundamental, really aggressive business pivot. This $1,000 stock price is obviously not being driven by consumers buying flash drives at Best Buy anymore. The entire narrative has shifted to enterprise AI infrastructure.
Yeah. The center of gravity for SanDisk, SNDK, has moved squarely to the hyperscalers.
Right. The Amazons, the Microsofts, the Googles.
Exactly. These massive cloud computing providers are currently stockpiling NAND memory at just an unprecedented rate.
Yeah.
If you look at the data center demand for NAND right now, it is growing at over 40% annually.
Wow. Over 40%.
Yeah. And to put that monumental shift into perspective, by the end of this year, 2026, the data center is projected to officially surpass mobile devices as the single largest consumer of NAND globally.
That's wild.
It is. For 15 years, smartphones dictated the memory market. Today, it's AI. AI dictates the market now.
I want to stop and look at the mechanics of that for a second because I think it's a point of confusion for a lot of people. Sure.
When you hear AI revolution, the immediate thought is, compute power. You think of GPUs processing billions of calculations per second.
Right, the brains of the operation.
Exactly. So where does physical storage fit into that? Like, why are these data centers suddenly so desperate for memory?
Well, it comes down to the difference between training an AI model and actually running it.
Okay.
When you train a model, yes, you are heavily reliant on the GPUs crunching numbers. But as these models move into the inference phase, meaning they are live, and millions of users are asking them questions in real time, the AI has to instantly pull from colossal databases of context to generate an answer.
Right, it needs to remember things.
Exactly. You can have the fastest processors on Earth, but if they have to wait around for data to be retrieved from slow storage, the whole system bottlenecks. AI inference requires massive, instantaneous access to data.
So it's essentially a plumbing issue. The GPUs are the engine, but if the fuel line, the memory is too narrow, the engine just stalls out. That is a highly accurate way to look at it. And this is exactly where SanDisk, SNDK, has managed to carve out a significant technological edge with their BiCS8 technology.
Right, the BiCS8.
Yeah, they are aggressively ramping up production of this right now.
Let's explain how BiCS8 actually works, because, BiCS8 just sounds like industry alphabet soup.
It does, yeah.
What is the actual mechanism making it so valuable to these data centers?
So BiCS8 is their 8th generation of 3D NAND architecture. And to understand why it matters, you kind of have to look at the physics of manufacturing memory.
Okay.
For decades, chip makers just tried to shrink the memory cells horizontally to fit more on a single chip. But eventually, you hit a quantum physics wall.
because they just get too small.
Right. If the cells get too close together horizontally, the electrons literally leak between them and your data gets corrupted.
Oh, wow. It's like urban planning. Like when Manhattan ran out of horizontal space, they couldn't just keep squeezing buildings closer together. They had to start building skyscrapers.
Exactly. That's a perfect analogy. And BiCS8 is essentially a highly advanced skyscraper for data. They are stacking memory cells vertically in 3 dimensions.
Oh, okay, so going up instead of out.
Right. This allows them to pack significantly more data into a much smaller physical footprint. But, the capacity isn't even the most vital part here.
It's not.
No. By stacking the cells this way, the physical distance the data has to travel is vastly reduced. Shorter travel distances mean lower latency, faster data retrieval, and crucially, it slashes power consumption.
Ah, which is the holy grail right now. Because from everything we've read in these analyst notes, power is the ultimate limiting factor for AI data centers.
100%.
Like, you can't just build an endless facility.
Yeah.
You are limited by whatever the local power grid can handle. So if SanDisk, SNDK, can offer a drive that uses a fraction of the electricity, the hyperscalers are just going to buy every single one they can manufacture.
And SanDisk knows this. They expect BiCS8 to account for 40 to 50% of their total output by the end of fiscal 2026.
That is a fast ramp up.
It is. And beyond that, they've also established a joint venture with SK Hynix to develop something called high bandwidth flash, or HBF.
Right.
That is slated for late 2026 or early 2027. And the goal there is to provide 8 to 16 times the storage density of current high bandwidth memory setups.
So basically, it's kind of like SanDisk, SNDK, is selling the pickaxes for the AI gold rush. But instead of compute power, they're selling the massive warehouses needed to store the gold.
Yes, absolutely. That's exactly what they're doing.
Hold on, how does that actually affect SanDisk, SNDK's stock price for regular investors like me?
Well, this completely changes the way we should view their revenue. Historically, memory was sold on a spot market. Companies would manufacture chips and sell them at whatever the going daily rate was. It was highly volatile.
Feast or famine.
Exactly. But because these hyperscalers are terrified of running out of power-efficient storage, they are locking SanDisk into long-term, multi-year contracts, which gives them unprecedented pricing power. They're moving away from those unpredictable spot market sales.
Okay, so compare it to last quarter. What actually moved the needle here? Because a compelling narrative is wonderful, but the market only rewards hard numbers, and 1,000% stock run implies some earth-shattering financials.
Oh, they are earth-shattering. The numbers reported in late January for their fiscal Q2 2026 absolutely shattered expectations.
Lay them on me.
If we contrast them directly with Q1, in the first quarter of 2026, they reported $2.31 billion in revenue. By Q2, that revenue surged to $3.03 billion.
Whoa!
Yeah. That is a 31% jump quarter over quarter.
Wait, a 31% sequential jump in a physical hardware business? That's astonishing. Usually you look for that kind of growth year over year. To do that in 3 months requires a massive operational shift.
And the underlying mix of that revenue is even more telling.
Yeah.
If you isolate their data center revenue, it jumped 64% sequentially.
64%.
Yeah. Earnings per share crushed Wall Street estimates, coming in at $6.20 for Q2. But what really ignited the stock was their forward guidance.
Right, the market is always looking ahead.
Exactly. They raised their Q3 revenue guidance to an incredibly aggressive target of $4.4 to $4.8 billion.
But, how are they managing to extract that much cash so quickly? Is it purely that they are manufacturing more drives, or are they actively squeezing the buyers on price?
The pricing power is the primary engine here. In September 2025, SanDisk, SNDK, implemented a flat 10% price increase across all of their distribution channels.
Just a flat hike.
Yeah. Now, in a normal market, buyers might balk at that and go to a competitor. But right now, the demand for high-end AI memory is so inelastic, meaning the buyers have absolutely no choice but to pay up to keep their multi-billion-dollar data centers running, that the entire 10% increase fell straight to SanDisk's bottom line.
That is the beauty of fixed cost leverage. A semiconductor fab costs billions of dollars to build and run, whether you sell the chips for $1 or $10.
Right.
Once your fixed costs are covered, every extra dollar you charge is almost pure profit.
Which is precisely why their gross margins leaped from 26.2% in Q4 of 2025 to 29.8% in Q1. And their future guidance is now pointing to margins north of 40%.
Wow. A 40% margin on physical hardware is almost unheard of. That is the kind of profitability you usually only see in software companies where distributing an extra copy costs nothing.
Exactly.
And because of this cash generation, they reached a net cash positive position way ahead of their own internal schedule. They now have more cash on hand than total debt.
Which gives them incredible flexibility.
Yeah, they can fund their own research, weather macroeconomic storms, or build out new fabs without taking on expensive loans.
And that brings us to the critical counterargument.
Here we go.
Reaching a net cash positive position is a massive achievement, but the market is currently pricing this stock as if the macroeconomic storm will never, ever arrive. We have to dive into the bear case.
Right.
Because in a hyper-cyclical industry like memory, peak earnings often look like an incredible bargain right before a catastrophic crash.
This is the classic valuation trap. I'm looking at the metrics right now, and SanDisk, SNDK, currently has a forward price-to-earnings ratio of less than 10.
Right.
In today's tech sector, where the big AI darlings are trading at 50, 60, even 70 times earnings, a forward PE of 10 makes a stock look like the deal of a lifetime. Why shouldn't an investor back up the truck here?
Because that low PE is an optical illusion. You have to look at how that ratio is constructed. The E in the PE ratio, the earnings, is currently massively inflated by a global NAND supply shortage.
Okay, so the earnings look huge right now.
Right. Prices are artificially sky high, which makes the earnings look colossal, dragging the PE ratio down to 10.
It's like looking at your speedometer while driving down a steep hill with a massive tailwind. You think your car is incredibly fast, but the environment is doing all the work.
That's it exactly. And the environment is about to change. We have to ask what happens when competitors like Micron, Samsung, and SK Hynix finish building out their new fabrication plants.
Because everyone is building right now.
Building a semiconductor fab takes years. So right now, everyone is suffering a shortage. But when all those competing fabs finally come online and start pumping out chips, the supply floods the market simultaneously.
And memory is ultimately a commodity.
Yes, if Samsung decides to flood the market to capture market share, that shortage turns into a massive oversupply in a matter of weeks, prices crash, and SanDisk's earnings will just evaporate.
And when those earnings drop off a cliff, suddenly that PE ratio of 10 shoots up to 50. Not because the stock price went up, but because the denominator, the earnings, just vanished.
Furthermore, there are specific financial red flags embedded in the sources we reviewed. First, there is a massive dilution overhang.
Oh, from the parent company.
Yeah, Western Digital, their former parent company, still holds a significant stake following the spinoff. Analysts project they're potentially looking to offload over $3 billion in shares.
Ouch.
If they dump those shares on the open market, the sheer influx of supply will drive the stock price down, regardless of how good the earnings are.
Right.
Second, we are seeing notable insiders selling at these peak levels. And third, you have to look at the stock's beta, which currently sits at an incredibly high 2.18.
Let's contextualize that beta metric for a second. A beta of 1 means the stock moves exactly in tandem with the broader market.
Right.
A beta of 2.18 means this stock is essentially strapped to a rocket engine with no steering wheel. It experiences violent volatility. If the market goes up 1%, SanDisk, SNDK, goes up more than 2%. But on a red day, it falls more than twice as hard.
This extreme volatility is exactly why analyst price targets are completely fractured right now. You have some analysts setting targets all the way up at $1,250, believing the AI supercycle is permanent.
And on the flip side,
You have others setting targets as low as $250, believing the cyclical crash is imminent because Micron recently signaled they are vastly expanding their high bandwidth memory capacity, which historically triggers a huge CapEx war among the big three, and then Samsung.
right, but what does all that actually mean for SanDisk, SNDK investors?
Sorry. It means that SanDisk's current peak margins, that 40% figure we were marveling at, are entirely dependent on tight global supply holding up. SanDisk does not operate in a vacuum.
Got it.
If a competitor blinks and overproduces, SanDisk's margins will vanish overnight, regardless of how efficient their Byte-Size 8 technology is.
So basically, it's kind of like surfing a massive wave. You look like an absolute genius while you're riding it, but if the wave of demand crashes, you're wiping out hard.
That is the exact risk. You are betting on external factors completely outside of SanDisk's control.
Yeah.
And, while Wall Street is entirely fixated on that enterprise AI narrative, we need to turn our attention to the retail side of the business.
Oh, yeah.
Because while the enterprise division is printing money, the everyday consumer division is quietly experiencing a severe, highly damaging crisis.
This was honestly the most surprising part of the research for me because it is not showing up in the headline financial numbers yet.
Not yet, no.
But if you look at the professional creative community, the people who edit feature films, high-end YouTube videos, commercial photography, they are in open rebellion against the brand.
That's bad.
We dove into the professional editing community on Reddit, specifically the Redditors subreddit, and there is a massive stickied warning thread at the top of the board about SanDisk, SNDK.
And the technical failure they are experiencing is not a minor inconvenience. It is catastrophic.
It is incredibly specific to their 4TB Extreme Pro SSDs. These are the high-end, rugged, portable drives that professionals rely on out in the field.
Right.
Users are reporting that when they perform a sustained write, for example, if a camera operator tries to back up an entire day's worth of 4K video footage all at once, the drive completely loses its file system.
It just disappears.
Yeah, it just unmounts itself from the computer, and when you plug it back in, the computer does not recognize it at all.
And we should clarify what losing a file system actually means. The data, the actual video files, might physically still exist on the flash memory chips inside the enclosure. But the file system is essentially the index, or the map, that tells the computer how to find, organize, and read those files. When the controller on the drive panics and corrupts that map, the data is orphaned. The drive becomes a brick.
Exactly. And while sometimes professionals can recover the data using incredibly expensive recovery software, a lot of times the footage is just gone forever.
Heartbreaking.
Imagine being a digital imaging technician on a multi-million-dollar film set, and you have to tell the director you lost the entire day of shooting because your drive failed under a heavy workload. It is just unacceptable.
Definitely.
But what is making the community even angrier is how SanDisk, SNDK, has responded to all this.
Yeah, the rollout of the fix was heavily criticized. They released a firmware update to patch the controller issue, but they initially only released it for Windows PCs.
Which shows a massive disconnect from their user base. The vast majority of professional video editors and creatives operate almost exclusively on Apple's Mac ecosystem.
Right, they're all on Macs.
So Mac users were effectively told to go find a friend with a Windows machine to update their drive, or just sit around and wait.
It's a PR nightmare.
And the final insult here. Users who did jump through the hoops to successfully apply the firmware update are reporting that their drives are failing a second time. The update did not actually fix the root cause of the sustained write failure.
And the financial implications of this are significant. We need to look at Q1 consumer revenue, which was still $652 million.
That's a huge chunk of change.
It is. That was actually up 11%.
Yeah.
While the enterprise AI division is undeniably the current golden goose driving the stock toward $1,000, abandoning or alienating the consumer base destroys SanDisk's historical safety net.
Because if that AI supercycle we talked about earlier actually turns out to be cyclical and the wave crashes, they are going to desperately need those everyday consumers to fall back on to keep the lights on.
Precisely. If the enterprise cycle turns down in 2027 or 2028 and hyperscalers suddenly realize they have enough memory and stop ordering, SanDisk, SNDK will need that $652 million a quarter from consumers to sustain their operations.
But trust takes years to build and only seconds to lose.
Exactly. If you have users in these forums vowing to never buy the brand again and actively fleeing to competitors like OWC Thunder Bay enclosures or Glyph drives, that safety net is gone. They are permanently destroying long-term brand equity for a short-term AI bump.
It really sets up the ultimate tension of this entire deep dive. On one hand, you have a company executing brilliantly on the AI enterprise front. The quarter-over-quarter financial growth is staggering.
Truly staggering.
You have 31% sequential revenue jump, 64% data center growth, margins expanding from the high 20s to over 40%. They are monetizing the AI boom as efficiently as anyone in the hardware space, leveraging their Byte-CS8 tech to lock in massive contracts.
But on the other hand, the existential threats are looming just out of sight. They are highly exposed to a cyclical memory pricing crash, which is a metric entirely outside of their control.
Yep.
They are facing a $3 billion dilution overhang from Western Digital, severe technical volatility with a beta over 2, and this quiet but highly damaging crisis in hardware reliability on the consumer front.
It is the ultimate risk-reward setup dialed up to an absolute 11. Which leads me to a final thought I want to leave you with before we wrap up.
Okay.
We've spent this entire time assuming that AI models will just keep getting bigger and requiring more and more memory.
Right. That's the consensus.
But what if the opposite happens? What if the next massive breakthrough in artificial intelligence isn't about brute force and larger data sets, but about algorithmic compression?
That's interesting.
If AI developers figure out how to make these models vastly more efficient, requiring a fraction of the storage space to perform inference, does the entire hyperscaler demand thesis for NAND memory collapse overnight? It is something to keep in mind if you are looking at that $1,000 price tag.
It is a phenomenal point. I mean, the technology is evolving so rapidly that today's hardware bottleneck could be solved by tomorrow's software efficiency.
All right, listeners, what's your take on the future of SanDisk, SNDK? Are you bullish, bearish, or sitting on the fence? Let us know in the comments. See you next time on the Byte-Size Brief.